Hey, what's going on, guys? Amir Garami with MCF Mortgage here with my partner, Ray Cruz. Happy 2022 to everyone. This is our first episode of the MIDD for this year. So this is episode number 11 for the year 2022. Today, guys, we're going to discuss a rescue deal that Ray put together and saved for a referral partner. So if you guys recall, the MIDD is our mortgage intelligently deal desk, where we go over recent deals that we've just funded and rescued through one of our programs. And Ray's going to discuss this loan in detail. This was a rescue deal that he got, and the borrower is a non-US citizen with some, extra hair on the file that Ray will go through. All right, Ray, take it away.
Yeah, thanks, Amir. Thanks for the intro. Happy New Year, everybody. Happy 2022. Hope everyone is doing well. And so this is a transaction kind of referred to me by by the listing agent, actually. The listing agent had this property listed. The borrower came to them with a pre-approval letter from a different lender. They accepted the offer, about 2 weeks prior to closing. The buyer and buyer's agent and the buyer get a phone call from the mortgage company at the time to let them know they can no longer move forward with the transaction. They couldn't get this borrower approved. So the listing agent, inquired as to why. They ended up finding out that this borrower is a non-US citizen and a non-permanent resident alien. So the listing agent thankfully had worked with us in the past and had a client like this herself, actually, that we had closed on. So she gave my contact information to the buyer's agent, and he reached out to me. So had a conversation, trying to find out what was going on. Of course, he didn't necessarily really provide much information, because I think that mortgage company they were working with just didn't, basically just told him we can't move forward, and didn't really give him any reasons. I think he did. He used debt to income as the reason why, but from the conversation and the amount of money the borrower made, I kind of got a feeling that wasn't really the case, right? It was something else. So borrower ends up applying. Throughout within the few minutes, I realized, okay, the borrower is not a US citizen, doesn't have a permanent resident alien card. I'm like, bingo. Can
I interrupt you there? You're walking a very fine legal line. So when someone's not a US citizen and they're not a permanent resident alien and they don't have a visa, what does that make them? Go to the heart of the matter.
Yeah. So that they have what's called a tax ID number, right? So they are provided a tax ID number by the government to be here in the U.S. So they can basically they'll be able to work with that and file taxes with that tax ID number provided by the IRS.
But they're not legally here under immigration rules.
Correct. Right? That's right. But they are here. And they are working, and they are paying their taxes.
Yeah, they're hard workers. They deserve home ownership just like everyone else does.
Right. So, so the program is called an ITIN program that we have for this borrower, ITIN, and it essentially uses the tax ID number that they have in lieu of their social security number, and they also have credit. Right. So this particular borrower had excellent credit, had like a 786 credit score, right? Has been living in the United States for almost 20 years, right? And had a ton of credit, just never had home ownership in the past, right? So, so in talking to them, quickly found out that was the issue. Of course, I reached out to the buyer's agent to ask him if, hey, did the borrower know about, or did the lender tell you that this was the issue? Of course, he said, no, that was just DTI. So, okay, let's move forward. So we do have a program. We ended up actually verifying, all the data. You still have to verify income, just like a regular conventional mortgage, right? A lot of these borrowers are self-employed and not W-2 earners because they don't have a social security number, right? So they tend to be self-employed, which is still okay. They file their tax returns. It's a full documented loan. So we do collect 2 years tax returns. We take the income off of those tax returns and we calculate that to qualify these borrowers. The rates are a little bit higher because they're not loan securitized by any of the agencies like Fannie or Freddie, or any of the government agencies. And we also portfolio these loans, right? So at the end of the day, we're able to help the borrower out. In this particular instance, I believe the down payment was about 10%. I think he was also allowed to, he also received some gift funds, which also are allowed in these types of transactions. And we were able to close this loan, within a 30-day period from the time that we got it. So at the end of the day, the homeowner was, beyond excited, right? I mean, they've been living in this country for, like I said, almost 20 years, where had never been able or given the opportunity to own property. And now they were, and as a matter of fact, it was, it's generational. We also always talk about financial literacy, and
Absolutely.
it creates generational wealth, right? I mean, so this homeowner, he was in his late 50s. He has kids that are in their late 20s, early 30s, right? Kids,
legal kids that are born in America
they're not born in America, not born in America, right? That's where I was going with this, not born in America, right? So they also don't have their socials, right? But they now, guess what they're doing now? They're now understanding, hey, I can become a homeowner too, right? And now they're actually I've pre-approved them and they're looking for homes themselves now.
Wow.
Yeah, so it's a great opportunity for them to understand that they do have the opportunity of home ownership with their ITIN numbers.
Yeah, I mean, that's amazing. So a couple of things to point out here, guys. One, we rescued a homeowner's down payment because down payment was going to be jeopardized because some lender took this file in, did not do the appropriate, upfront homework. Every file has homework, guys. You need to go through a lot of things. So that homework wasn't done. They try to get out of this loan by saying it was debt to income. Obviously, it wasn't. This is a gentleman who makes a good amount of money. He's self-employed. So it wasn't debt to income. Maybe it was debt to income in the fashion that you can't use the income in a traditional sense. And this lender did not know how to work with it. But again, it comes to preparation. We rescued our realtor's hard-earned commission. This realtor has worked hard with this borrower for for months to get them to this point. And again, going back to the core values of what we stand for at MCF is that we want to give you financial literacy and we want to build generational wealth, not just for you, for your offspring and for their offspring. And it all starts with home ownership. You're not doing that when you're paying your landlord's rent. You're creating amazing wealth and generational wealth for him and his family, but you're not for yourself. So what Ray did here, guys, is a program. Again, it's called an ITIN loan. If you have someone or if you know people that you come across with that may not have the correct, immigration paperwork, but they do have an ITIN. These people are paying taxes in America. They're upstanding citizens, and they're contributing to their communities. Let's help them get into home ownership.
And I would say they have to qualify for a mortgage just like everyone else does.
Yeah, and they're actually putting more money down than the quote unquote legal immigrants, right? They're putting
minimum down payment. Minimum down payment is 10%, and there's plenty of programs with offered by the government that they're not eligible for, right? Out there that are 100% financing, 3% down, 5% down, 3.5% down, that they're not eligible for. So they have to put a minimum of 10% down.
Right. And guys, I can tell you in our portfolio of loans, these loans have a lower chance of default than your traditional loans where someone's putting down, like FHA, let's say 3.5% down, and they're legal in all senses of immigration word.
Lower credit, but lower credit scores.
For lower credit scores. Ray, great work. So hopefully we'll hear some more good stories where we've helped both our referral partner and a new family on their way to building wealth.
Absolutely. Thank you.
All right, guys. Until next time, have a good one. Take care.
Take care, guys.